This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone, live on Bloomberg TV Radio, streaming on YouTube and Bloomberg Originals. I'm Jess Menton, and with Lisa Mateo from Bloomberg. Of course, Carol Massar and Tim Stenivek do have the day off, but not to worry, we're both here. We're going to have fun the next hour on Bloomberg Television.
Folks, buckle in.
Because we have a lot to talk about, especially looking at the setup today in the U.S. stock market, trading around records. On the back of what was going on, Lisa, of course, with those producer prices coming in, obviously lower than expected, especially when you're thinking about what that means for the inflation story, the Federal Reserve, but not too shabby ahead of CPI data tomorrow morning.
Yeah, declining in August for the first time in 4 months. So that was huge news.
It was. And then plus, we're going to have Bloomberg News equity reporter Bailey Lipschultz talking about Klarna. So this is the big IPO coming public today, the Swedish fintech company, buy now, pay later. So we're going to have an update on that. And then also we'll have other people coming in like Fred Thiel. He's chairman and CEO of Mara Holdings, on the regulatory outlook for Bitcoin and the company's recent progress with Bitcoin mining, Lisa.
A lot going on.
There's a lot going on. So first up, before we get to all of that, let's get a check on today's trade and top business stories with none other than Charlie Pellet.
Hi, thank you very much. And lots of moving parts to this market today, but two very big ones. Klarna, you touched on Oracle as well. Let us begin with the Klarna IPO. Right now, we do have Klarna up by just about 20% right now. Went out the gate at $40 a share on Klarna, $46.80 right now. Last quarter I'm looking at on Klarna. Oracle, the other big earnings story today, up 38.4%. After last night's earnings report, we've got the Dow lower, the S&P, NASDAQ, both at records. And of course, we'll keep you covered on this throughout the day. Could see a record close on the S&P, up right now by 20 points. That is a gain of 0.3%. If you're keeping score, the S&P now at 65.32. NASDAQ, by the way, also at a record, up 29 points, up 0.1%. The Dow, though, in the red, down 0.6%. PPI Wednesday, we've got the 10-year yielding 4.03%. 2-year ahead of the CPI tomorrow, 3.52%. Gold up $20 the ounce, 36.46, up 0.5%. West Texas Intermediate crude oil up 1.8%, 63.77 a barrel. And Bitcoin right now higher by 2%, 113,760 on Bitcoin. So again, recapping here, we do have Klarna trading at 46.94 and Oracle after earnings surging 38.6%. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you, Charlie Pellet. So, Jess, you were breaking down all the things we have going on for today.
Right.
There have been a few more headlines, too, on top of it. Okay, so this is a day after the BLS. They published a preliminary revision to annual payrolls data. Now we're getting word that the Labor Inspector General initiating a review of challenges at the BLS. On top of that, we have another legal move in the president's quest to remove Fed Governor Lisa Cook. A lot going on. We want to bring in Michael McKee, his international economics and policy correspondent for Bloomberg TV and radio. So I want to start with Lisa Cook because there's been so much back and forth. It's hard to keep up with it, Michael McKee. So does this latest move, does it remove Cook from her position before a Fed decision in a week from today? Or what does it mean?
No, it keeps her in that position.
In the position.
In the position. But what the administration has filed a notice of appeal this afternoon, so they're going to go to the Circuit Court of Appeals in D.C. We don't know the speed with which they are going to file their documents and ask for a hearing, but if they move very quickly, they could, in theory, if the court agrees, block her before we get to that meeting. But it's getting very tight for something like that. So I suspect she'll probably be there.
Walk us through any sort of precedent when it comes to something like this with a Federal Reserve governor, but then also, is there just cause there when it comes to the president?
Well, it's funny because you mentioned those two things. This is the point that the judge made, is that nobody has ever tried to fire someone at the Fed for cause. And so she had to decide what cause means and whether or not the president's accusations rise to cause. And basically, she said that the historical record shows that cause basically relates to things that happen in your job while you're doing it. And that if she did something that she shouldn't have done before she came to office, and that was years ago, and people knew about it, then it wouldn't rise to cause. And that's one of the reasons that she said that Cook could stay in her office for now.
So what does it mean for time-wise? I mean, we're today a week away from a Fed decision.
Yeah.
What does this mean?
Well, the administration is going to have to move fast to get filed, and they will have to get a 3-judge panel that would hear it quickly enough. And they'd have to make the case that there would be some sort of harm to the government if she were allowed to vote at this meeting, because they can make the case that there's harm to the government if she remains on the job without a determined time frame. They could, let this could play out over a week or so, and we've seen that with other people that the president has tried to fire. But to get her out before the meeting would take a lot, because it doesn't seem to rise to the necessity of having judges work through the weekend.
Is there an indication about a timetable when you're talking about over the next week or so? How long could this possibly drag out?
Oh, it's going to drag out for quite some time, because whatever happens in the appeals court, it will probably go to the Supreme Court. And because this is a unique case, nobody has ever tried to fire somebody for cause and the definition of cause, et cetera. So the Supreme Court is starting to back up with Trump problem cases. They just took on the tariff case on an expedited basis, so they would have to have a hearing for that in November and then try to make a decision maybe by the first of the year. If it goes to the Supreme Court, and in this case, it doesn't seem to be the kind of thing that's going to set the world afire. So we could go on the regular docket, and then we don't get a decision till next June. So then the question becomes, does she stay on the Fed until that time? And that'll depend both on the appeals court, and then the Supreme Court could also issue a stay and kick her out, as they did with other people that Trump tried to fire. But again, this is an unusual case because the Supreme Court's given them something of a carve-out.
Now, if we get into the Labor Inspector General and this report that they're apparently doing, review of the challenges at the BLS. What are these challenges? What is this review?
Interesting language that they used, because one is tempted to read it after everything that the administration has done as, we're going to look at ways to find that you guys did something wrong and get rid of you. But it could be that, let me put it this way. I have said that if you were a normal administration, what you would say is, there seem to be issues with getting the data as accurate as it can be because you're short of money and short of personnel. So let's sit down and figure out how we can address those challenges, which is not what they did. But one could read the Inspector General as stepping in and saying, well, maybe I'll prepare a report that says you can't do all this with the resources that you've been given. I suspect, though, that it is probably an effort to, because Trump had fired all the inspectors general and appointed new ones, is an effort to find out something that they are doing wrong and make a case for further dismissals, which would only put them farther behind the 8 ball. Now, this is not the kind of thing that's going to get a lot of attention right away, and it may take some time. And so it's not an imminent threat to the BLS, but it is another cloud on the horizon.
So how does Stephen Miron ultimately fit into all of this?
Well, he fits into it because we're reporting, based on people familiar, that he will get a vote on the floor on Monday. It's not easy, given the Senate rules, to do something that fast, but the president said do it, so they are going to do it. And then he can walk in the next day and, somewhere in between the vote and the time the meeting starts, somebody will swear him in and he'll participate in the meeting. It'll be an unusual situation. He would have had no preparation other than what he can do at the CEA, but he wouldn't have access to the Fed staff or anything to prepare for the meeting. So other than advocating for maybe a 50 basis point cut, if we assume the Fed's going to do 25, it's hard to see how much he would contribute. But there's a good chance that he will be there. He and Lisa Cook will probably be there.
Then what's a chance that he would be nominated for a full term? That hasn't been...
Well, that's an open question. The president has sort of left that open in whether it's a tryout for the job or whether he's just keeping the seat warm so he could appoint someone else to be chairman if another seat doesn't open up. If Cook isn't gone or if Jay Powell decides to stay on, then whoever he wants as chairman, unless it's somebody who's already on the board, he would have to have an open seat. So then Steve Myron would go back to the CEA, it seems.
All right, Michael McKee, always a pleasure when you're joining us on Bloomberg Television and Radio, international economics and policy correspondent at Bloomberg Television and Radio. Of course, getting a quick check here on the markets with the S&P 500 still trading around those records on the back of obviously the producer prices that we saw fall to the lowest level since April. And then looking at technology stocks up more than 1.5% in the S&P 500. Of course, we want to get to our next guest, Lisa. So Jennifer Lee, our senior economist and managing director of economics at BMO Capital Markets, joining us from Toronto. Always great speaking with you, Jennifer. Thanks for joining us again. And to really unpack some of this latest data on the inflation print, break us down how you view when it comes to producer prices and what that could mean as a telltale sign for wholesale inventories before we end up getting another reading on consumer prices tomorrow morning.
Well, first of all, thank you for having me on this afternoon. And by the way, I don't know how Michael McKee is staying on top of all this. I'm getting stressed just thinking about all the ins and outs of the Fed. But in terms of the producer price report, I mean, I remember a time just like not too long ago then when nobody really cared too much about the PPI. But now, you know, it was all about the PPI. And it's interesting how volatile that report can be. So I'll tell you this, I had the same reaction when I saw it last month as I saw it this month. And my first word out of my mouth was, what? You know, we saw that huge 0.9% last month, and then it dropped, and then it came down as a 0.1% drop in the month of August. So if anything, I think we sort of have to average the 2 months out just to get a better idea of what producers are feeling on the pricing front, but they don't always go hand in hand with what you see on the CPI. So as interesting as this was, you know, again, they don't relate completely to CPI all the time. So I think it's going to be all down to whatever we see tomorrow.
So seeing what you've seen so far, are we on track, let's say, for the Fed to cut next week? I mean, should they consider a bigger cut than 25 basis points?
I think base case scenario, 25 basis points is a very reasonable move at this stage. You know, we were seeing economic growth slowing, but we're not slamming on the brakes anytime just yet. 50 basis points now, I've been saying this, I would not completely take it off the table just yet, only because we all know that there are at least two policymakers that have been chomping at the bit to have cut already. So they're probably going to be pushing for something more aggressive, and whatever happens with if Mr. Owram makes it on the committee as well, if his vote counts as well or not, we'll have to see. But I think 25 basis points, I think, is a pretty good bet for next week. I think it's more important or more interesting to see what they actually says, or what Fed Chair Powell says during the press conference about things going forward, how he sees inflation playing forward, what he says about the jobs report, if that changes his mind about anything, and of course the dot plot. Everyone's going to be counting the dots to see who did what, and see whether or not, you know, that changes for the next few meetings or so.
I want to just get a quick check here on the markets with Oracle OpenAI signing a $300 billion computing deal. That's according to the Wall Street Journal latest report. If you look at Oracle stock, ticker is ORCL. That's up almost 38% right now, on pace for its best one-day gain since December 1992, Lisa. But Jennifer, moving back to your thoughts ahead of the Federal Reserve decision, you just brought up the dot plots. Obviously, we get those quarterly, so we didn't see these the last time at the July meeting. We actually saw them in June. How are you expecting those plots to shift over the next few years here?
I wouldn't be shocked to see more dots moving towards more rate cuts, if not sooner rather than later. Further out, they'll probably stay the same, like the long term. But I think over the next, year and a half or so, I wouldn't be shocked to see a few more people moving over to see more cuts. If not this year, then maybe a little bit more next year. But again, so much is so uncertain right now. I mean, who the voters are going to be, what the data are going to show. I mean, even right now, even though CPI has not shown that huge increase that that many of us had expected, including yours truly here, but right now we're in that little pause, right? I'll leave it at that. We're in that pause right now, with that 90-day pause with China. That brings us to roughly mid-November or November 10th or so. So that has helped sort of keep prices in check right now. We've had deals with Japan and with the EU. The tariffs were not as high as many had feared, which is good news, but still we're going to see overall prices rise. But how much of that is going to be pushed on the consumer, when that's going to happen, whether or not they're legal, that's another thing. I mean, this is another that's another intriguing story, whether or not the court is going to rule that these tariffs are legal or not. And if they're not, what's going to happen? Are we going to take the money and give them back to all the consumers? Probably not. So all that is going to have a play on what, or say in what happens with inflation in the coming months. So I think, we cannot, unfortunately, we can only do this on a meeting by meeting basis, and everything is going to be data dependent.
Jennifer, I have to ask you about the revisions to the BLS, the jobs data. It gave us this confirmation, right, of slower job growth. So my question to you is would the Fed be cutting into an economic slowdown, and would it be able to sustain the stock rally?
So the numbers, first of all, it was worse than many expected at 911,000, but that only goes up to March. And we know that the data so far, of course, until recently, have also been slowing as well. Whether or not we're going to see revisions on that front is another story. But right now, I'm not completely convinced that that we're completely heading into a recession or a sharp slowdown, just given some of the other data. Looking at wages, for example, when you're looking at the latest personal income and spending data, the wages are actually up quite strongly in the latest month, which doesn't completely jive with what we saw in payrolls. So if payrolls were seriously that weak, meanwhile, we're seeing wages still rising strongly, that will also help support the consumer, even though I'm sure the consumer is going to be quite concerned about what they saw with the headlines this week on the jobs front. I think I'm rambling. I can't remember what the question was.
Well, I actually had something else I was curious about picking your brain about when it came to those BLS revisions, because Goldman Sachs economists actually sent a note out to their clients yesterday, and they were highlighting how when you're looking at those types of revisions, that they thought it excludes many unauthorized immigrants who were initially accurately captured in payrolls. So do you feel like the data is actually stronger than anticipated with those revisions, because maybe it might be included those undocumented workers?
I don't know how much of that will have a huge impact. That's a great comment. That also, again, brings us to the question how accurate these revisions are, and whether or not they're still facing challenges that the Labor Department is highlighting at this point. I also want to mention, by the way, that last year, this is during that period where we're seeing all these revisions, the Conference Board survey, and this is, by the way, why I always say, we can never look at one single report on its own. We have to look at all of them to make sure that they're all telling the same story, or, the same narrative. But the Conference Board survey, when they asked people, are jobs plentiful? Are jobs hard to come by? It was still that gap, that labor differential was still fairly strong over that time period. So I still have to, again, question whether or not this is the most accurate revision, not wanting to doubt the BLS, find people at the BLS. But, I think the overall narrative is that, yes, we know that the economy has been slowing. Maybe the labor market was slowing more than we had expected, but still we're not that close to slamming on the brakes just yet.
All right, Jennifer Lee, always a pleasure having you here on Bloomberg Television. Thanks for joining us. Jennifer is a senior economist and managing director of economics at BMO Capital Markets. And Lisa, doing another check here on the markets here, and obviously looking at Oracle. I just mentioned this earlier, but Oracle OpenAI signing a $300 billion computing deal, according to the latest report from the Wall Street Journal. Getting a check on that stock, ORCL, the ticker, up about 36% right now, on pace for its best day since December 1992.
And of course, Klarna, this ticker KLAR, made its trading debut. So we have to keep an eye on that on the New York Stock Exchange. The stock opened at $52, 30% above the $40 a share of Klarna's underwriters priced on Tuesday evening. So a lot to consider today on a day where we have stocks kind of mixed. We have the S&P 500 up 0.2%, and the Dow down about 0.5%.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Oracle and OpenAI have signed a $300 billion computing deal. That according to the Wall Street Journal. We got more on the Oracle story, including reaction to earnings, coming up in just a moment with our Caroline Hyde. Oracle right now surging 35.2% after last night's earnings report. The Dow negative, down 251, drop there of 0.5%. S&P holding on to a gain of 13 points, up by 0.2%. But since our last update, NASDAQ now in the red. Little change, but down by 1 point. 10-year yield 4.02% on this PPI Wednesday. CPI report tomorrow morning, 8:30 a.m. Wall Street time, with a 2-year currently yielding 3.52%. Spot gold up $22 the ounce, higher now by 0.6%. West Texas Intermediate crude up 1.8%, and Bitcoin up 1.9%, 113,614. Klarna, we're watching the IPO. Klarna shares, they are advancing now by 17.4%. Again, recapping, S&P now little changed, up 0.2%. Oracle up 35%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it, Jess Menton and Lisa Mateo here in the Bloomberg Businessweek studio. And we're going to speak with Caroline Hyde, Bloomberg Technology co-host, about what's going on with the latest news Charlie was just talking about with Oracle and OpenAI. And Caroline, of course, you're the best one to come in and break this down for us, because most of this we already knew. But from this latest Wall Street Journal report about Oracle and OpenAI signing this $300 billion computing deal, what's new here? What did we not know, and what did we learn now?
I think the nice big flashy number of $300 billion is what catches the attention. Look, we knew back in July that this extraordinary 4.5 gigawatt deal between OpenAI and Oracle had been signed. Just to put that in perspective, that's the same amount of energy that's from 2 Hoover dams. That is about 4 million homes. That is an extraordinary amount of compute. No wonder Charlie Pellet put it so eloquently about the share price up and to the right, because this sort of order backlog is extraordinary. And Safra Catz herself, when announcing these earnings, said that it had been a totally extraordinary quarter. And this is one of the deals they signed. I think more of the glaringly obvious concern is similar to a CoreWeave, similar to other compute providers. They are very exposed to a few clients. And so Oracle is making up basically, what, $300 billion worth of a $450 billion backlog. That's an awful lot of focus on one particular client. But they do say that they'd won some other multi-billion dollar deals from other cloud compute needers. And this is all about the pivot that Oracle made. This was a data software company. It is now one of the impactful compute providers in the United States. Basically, their growth rate is probably bigger than Google right now. Their backlog is bigger than that of Google's.
So what does it say about spending on AI data centers? you threw out all these numbers at us.
I mean, this is what's propping up the US economy. I mean, just to put it flatly, when you go back to Bloomberg Intelligence's own reporting and analysis, 1 percentage point of GDP growth so far this year is entirely down to the AI crescendo and the need for data center spend and the amount of capital expenditure we're getting from these hyperscalers that need to build data centers. Oracle that needs to build data centers. These are the neo clouds that are coming in as well. All of this just means that we're managing to support an economy that in other ways, other places are feeling strange. You've got a labor market that's falling a little bit low. We've got inflationary pressures. What is supporting this economy? It is data center spend. And I think that is like your key takeaway here. And who are the key beneficiaries? Yes, you've seen significant money going into the startups such as OpenAI. You've got valuations just eye-crushing in many ways. But then Oracle to now be up 40% on a day when it already added $200 billion worth of market cap running up to these earnings, and now they've added another set of that amount in one day. It's an extraordinary feat that Larry Ellison and his team, Safra Catz, have made.
Caroline, my last question is more as far as what does this mean also for its peers? Looking over at CoreWeave, you had mentioned that earlier. Ticker is CRWV, up 15% right now.
And it's one of the IPOs that did really well leading up today on Klarna's, for example, CoreWeave. Many people struggled with CoreWeave's business model ultimately. They're a very new neo cloud, as it's now called, this provider of ultimate GPUs of NVIDIA. And people are like, well, we don't understand. They've got great exposure to just Microsoft as a key client. People are now understanding there are only a few companies out there that are going to be able to foster this sort of data center spend. And no wonder you have to be over-focused on a few key clients. And no wonder we're starting to depend on more and more of innovative styles of getting compute. But for me, the thing that you're hearing time and time again, and actually I was just sat with Kathy Hochul, she's the governor of New York. She's all in on making this the empire AI state. Energy is the other resource that we lack. And so where are you going to get 4.5 gigawatts of power from to be able to power these data centers? That's why in the state of New York, they're up in Syracuse, or you're looking up in other areas where you can get hydroelectricity. No wonder we're turning to nuclear. This is the sort of scale of investment opportunities that everyone's been looking at. It's not just CoreWeave, it's not just Oracle, but it's also the energy, the resources all around it.
Caroline Hyde, I don't know where we pulled you from. It might have been from your desk and just grabbed you.
She has all the stats at hand.
She just, thank you so much.
I talk about this for a living, and it's a lot of fun.
We appreciate it. This is Caroline Hyde, Bloomberg Technology co-host with us, talking about that. Yeah, Oracle OpenAI signing that $300 billion computing deal. Okay, so we're going to kind of stick with Oracle in that same tone. We're going to bring in our next guest because Elon Musk, no longer the world's richest person. He's been bumped by Oracle's Larry Ellison. That's after the company's reported quarterly results. And now we're hearing this news. So Kristine Owram, Wealth America's team leader for Bloomberg News. Thank you for joining us. So you're sitting here listening to us talk about this, and then we had earnings. So how much did the Ellison's fortune soar after that?
Yeah, so this has been quite the day for Oracle, as Caroline was just saying. So Ellison, earlier today when the stock was at its peak, it's pared some of those gains now, but he was up more than $100 billion, and that was the increase to his fortune, not his total fortune. That got him close to $400 billion. At one point, he was at about $394 billion, putting him in first place on the Bloomberg Billionaires Index for the first time, also putting him ahead of Elon Musk for the first time. So this is very notable. Musk has been in first place for almost a year. And of course, we had the news last week of Musk getting his $1 trillion pay package. So this may be a short-lived first place for Ellison. Musk stands to make a lot of money over the coming years that could potentially make him the first trillionaire. But for now, Larry Ellison is in first place.
And then looking at Tesla's stock being down over 10% this year. And obviously there's different dynamics where we've seen it pop and then pull back. But how does that fit in when it comes to Ellison versus what's going on with you were just talking about with Elon Musk versus also Jeff Bezos? Obviously the poster child when it comes to Amazon.
Yeah, no, it's a very good question, because I think what you're seeing here is the divergence between the companies that are exposed to AI, as Caroline was just saying, and those that are struggling a little bit in that space. And of course, Musk has made a big deal about all of the inroads that Tesla is making in AI and how he wants that to be kind of like one of the main drivers of the company going forward. But so far, the market doesn't really seem to be buying that. So Tesla hasn't been performing super well. And of course, there have been a lot of other issues there around his political involvement and other things too that have weighed on the stock. But despite that fact, Musk had clung tenaciously to the #1 spot for quite a while, just largely actually not because of Tesla, because of all of his other ventures, SpaceX, super valuable company, XAI, X, formerly Twitter, all bolster his fortune. But it seems like as of right now, that isn't enough. But again, with that massive pay package that the board has promised him, if that passes muster, that could change very quickly.
Before you go, quick question. So can you break down that battle back and forth for that top spot? I mean, not just Bezos, but other, folks have been up at that top spot.
Yeah, actually, so Ellison just surpassed Mark Zuckerberg in July, so only a couple of months ago, to move into second place. Zuckerberg has fallen a little bit with Meta. Bezos and Zuckerberg have kind of been jockeying back and forth. But I think what this reflects, because, earlier this year, I think Ellison was in fourth or maybe even fifth place. And how quickly he's climbed the ranks just reflects how much Oracle has been able to sort of glom onto that AI narrative, how successful it's been in selling that narrative to shareholders, and we're seeing that in the 35% share jump today.
All right, Kristine, always great having you with us. Kristine Owram, obviously Bloomberg News, Wealth America's team leader, joining us here in the Bloomberg Businessweek studio, and Larry Ellison surpassing Elon Musk. So we want to switch it up and get to Klarna with none other than Bailey Lipschultz. He's our Bloomberg News equities senior reporter and also one of our deputies on our team. So what's going on with the buy now, pay now? Walk us through the IPO.
Yeah, Klarna pricing its IPO overnight at $40, opened higher by about 30%. Now down closer to 15%, cutting those gains in half. This comes, as you mentioned, after the buy now, pay later company raised about $1.4 billion in its IPO, fifth largest deal in the U.S. for first-time share sale so far this year. Not quite the pops that we saw for Circle, which opened up 123%, or Bullish, which opened up 143%, Figma, which closed up 250%. So not the mania that we saw during the summer, but still a really strong open. The big question is, can it maintain that momentum? As I mentioned, it's closer to up 16%, so giving back about half of those gains.
Sequoia Capital expected to reap the benefits from this IPO big time. I mean, how much have they invested in the company, and how much is their stake worth?
Yeah, so according to our reporting, so they basically reaped $2.7 billion gain on the IPO. They've been a long-time investor. They've been one of the big backers for this company. It really is an interesting kind of process and product that we've seen, just because Klarna is 20 years old. So it's an older company. This is a company that people expected to go public earlier this year. This is a company that at one point in the private markets, I know it's a little weird, but was valued north of $45 billion. So not quite the paper return that many were expecting, but Sequoia, one of the big beneficiaries from this IPO. The big question with all deals is, what does the exit path look like? So 6 months from now, we'll get that first lockup expiration. Will we see older, longer-term holders, the Sequoia Capitals of the world, some of those partners look to sell? Will the CEO sell? That's really kind of going to be the long-term question. But when we're looking at the immediate trade right now, it's a big win on paper for a number of these investors, but the follow-through is really what matters.
So what does the outlook for the IPO market look for 2026?
2026 is going to be an interesting year. We are finally getting the deals that people were talking about in April. So next week, we'll have StubHub finally go public. Netscope is in the cybersecurity space. They're pricing early next week as well. We have a busy kind of slate with one deal tonight, 4 deals tomorrow, building momentum. When I talk to bankers, the big question, though, is how can you bake in retail investor demand? We see these crazy share moves. Gemini, the Winklevi crypto company, has opened up their allocation to retail up to 30%. So you're seeing newer investors, you're seeing a lot of volatility. If we see the market continue to trade higher, broadly speaking, that bodes well for this window. But just to your point, 2026 is going to be a big one, because that's when we should see private equity get more active.
And in the last 30 seconds or so we have left, how is Klarna expanding beyond where they are now, beyond, buy now, pay later? What are they doing?
Yeah, their pitch is really becoming more of a neobank. It's interesting when you meet with management, everyone wants to comp it to Affirm, the other main buy now, pay later company that caters to U.S. consumers, but they want to see themselves more as a SoFi or a new bank. So trying to expand their offerings, expanding their portfolio, wanting to compete more with credit card companies. It's an interesting strategy, but again, when I talk to buy-siders, they're kind of saying that's all fine and dandy, but we're really comparing them to Affirm, because the bread and butter is buy now, pay later, and what that vision looks like here in the U.S.
All right, Bailey Lipschultz, senior reporter on our U.S. equity team, also a deputy. Always a pleasure having you break down all things when it comes to the IPO market on such a big day, Lisa, especially looking at these markets. Just looking at the S&P 500, still trading above 6,500 around records, on pace to close. That's around close to 24 records so far this year for the S&P 500, obviously rebounding close to around 30% from those April lows. Lisa.
Yeah, and we've got so much coming up here on Bloomberg Businessweek. So stay tuned. We have Fred Thiel. He's chairman and CEO of Mara. He's going to be talking about the regulatory outlook for Bitcoin, also the company's progress with Bitcoin mining. So a lot to break down with him. You don't want to miss it. Stick around. We have more Bloomberg Businessweek coming right up.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. First day out for Klarna. Right now, the stock up by 15%. The other big name in the news, Oracle, after earnings. Stock right now pushing higher by 35%. Keep it locked into Bloomberg Television and Radio for the latest on both the IPO and also the move today for Oracle shares. Big question, we going to see a record close? Right now, we got the S&P up 16. Yes, trading at a record, up 0.3% at 65.29. The Dow does remain lower, down 223, now down 0.5%. NASDAQ Composite Index was negative just a couple of moments ago, higher now by 8, little changed, up under 0.1%. The 2-year yield 3.52%, with a 10-year currently yielding 4.03%. PPI Wednesday, the CPI report drops tomorrow morning, 8:30 a.m. Wall Street time. Spot gold up $19 the ounce, up another 0.5%, 36.45. West Texas Intermediate crude up 1.9%, 63.80 on WTI, and Bitcoin at 113,550 right now on Bitcoin, up by 1.8%. Your next Uber. Could be a helicopter or a seaplane. Uber customers will be able to book Blade's helicopter and seaplane services directly within the Uber app as early as next year. The booking shortcut will help Joby Aviation and Blade reach the millions of consumers who've already downloaded the Uber app on their phones. Joby, by the way, is developing an air taxi service. Joby shares down 0.1%, Uber down 1.2%, and rival Lyft higher by 3.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Jess Menton and Lisa Mateo here in the Bloomberg Businessweek studio, continuing what we're talking about, especially when it comes to the regulatory outlook, Lisa, when it comes to Bitcoin and the recent progress with a particular company. So Mara Holdings. So we had Fred Thiel, chairman and chief executive officer of Mara Holdings, who's going to be breaking down kind of the latest here, especially in the midst of the Trump administration being more pro-crypto. And he is joining us from London. Fred, thanks so much for being here. Always a pleasure speaking with you. For our listeners who haven't heard about your company, talk to us more about specifically Mara and what it is that y'all do and how it relates to the crypto space.
Sure. So we are one of the largest Bitcoin miners in the world. We operate 16 data centers across 4 continents, across a variety of energy sources and sizes and scales. We are one of the most advanced in the use of liquid immersion technology, which is a cooling technology that doesn't use water, that keeps our miners cool. And we are also the second largest public holder of Bitcoin in the world today, with over 50,000 Bitcoin in our balance sheet. So you can consider us as a kind of company that takes stranded energy and converts it into value by converting it into Bitcoin. We also own and operate our own wind farm. We mitigate methane gas in oil fields by burning the flare gas and generating electricity from it. And in Finland, for example, we heat 80,000 homes with the heat from our data centers. So we're very environmentally focused and have a sustainability focus, and that over 50% of our energy is from renewable sources.
Yeah, so speaking of energy, Fred, I guess I'll go there since you mentioned it. It's an energy-intensive process, right? So how is it different from the energy used to power, let's say, data centers for AI? What does that mean for, you know, the industry as far as that's concerned? AI, you know, versus Bitcoin and the amount of energy that it takes.
Sure. So the primary difference between the two, we're both what are called high-intensity compute, meaning compute that uses a lot of energy. The differences between Bitcoin mining and AI is that AI data centers need to have high availability. They need to operate at 99.999% uptime, which means that they have to constantly be consuming energy and they have to have a constant amount of energy allocated to them. Bitcoin miners are a flexible load. What that means is that we can move our demand, if you would, of energy up and down in relation to the amount of energy the utility has available. So we essentially use stranded energy, or every electron that can't be sold to other places, basically. So if you think about what we do in the world of renewables, for example, with wind farms and solar, is a lot of times these wind farms can't sell 100% of the energy they produce because there are problems around congestion. What do I mean by that? Well, demand for electricity is not constant, meaning it's not X number of watts 24 hours a day. It varies depending on the time of day, the temperature outside. Are people heating their homes? Are they not? Are they doing laundry? You think of all the different things that you use electricity for. Do they have EVs? Have they plugged them in to charge at night? And so the demand for electricity varies a lot during the day. The problem is when you add a lot of wind and solar energy to grids, those power sources generate electricity at specific times of day only. The wind typically only blows during certain hours, primarily afternoon or early evening, and the sun basically shines from 9 a.m. to 3 p.m. from a solar energy perspective. And so if you don't have high energy demand during those times, those energy sources don't contribute a lot to the grid, and the grid is running its traditional, it may be nuclear, it may be other forms of natural gas, things like that it runs as baseload. And so a lot of times this renewable energy is wasted. It's not used. And so we can come in to these renewable energy sites, consume all the electrons they can't sell into the grid, which helps them become more profitable, which allows them to compete by lowering their price of electricity to the grid and to consumers, which is a benefit to consumers. Right. And it also means these projects pay off faster. So we're actually a huge financial windfall for these guys.
And for those just joining us, we're with Fred Thiel, Chairman and Chief Executive Officer of Mara Holdings, talking to us about Bitcoin mining here. And of course, you were just talking about the energy aspect of it. What is it like competing for AI power specifically? Because big tech does have a lot more money to spend on electricity. So how does that end up affecting and changing your strategy?
So there are some other subtle differences. Because the fact we can use we're a flexible load, and so we can change our demand depending upon availability. We can put our systems in places where AI companies can't, because they need constant load to operate their data centers. Another thing that AI data centers need is access to high-speed fiber connectivity, because they obviously need to be able to share data with their customers. Bitcoin miners don't need that high-speed connectivity. And so again, we can locate in places where AI companies can't. So while there is a large overlap in the potential sites that we could both use, in reality, we tend to go places where they can't, and they tend to go places where the electricity is too expensive for us, because what's most important for AI companies is low latency network speed, meaning fast network connections, and also constant availability of electricity. And because we don't need those things, we tend to go after lower cost sources of energy.
And Fred, before you go, I'm going to squeeze one more in because we have about a minute or so left with you. There's been a lot of regulatory changes when it comes to Bitcoin. So describe how Bitcoin looks differently under this new administration, and what does it mean for the sector moving forward?
Sure. So the big kind of watershed event was in January of last year, when the first Bitcoin ETFs really were approved, and you saw this large amount of capital flow into the ETFs. The Biden administration had really been focused on trying to restrict Bitcoin and crypto in general. The challenge for the Biden administration was that Bitcoin had already been deemed a commodity and therefore wasn't governed by the SEC, but rather by the CFTC. That being said, the FDIC, the OCC, and the other regulators were effectively keeping any crypto-related companies from having access to the banking system and other things. Under the Trump administration, all of those regulatory advisory notices to banks regarding working with crypto companies were essentially torn up and repealed or reversed. The SEC changed its position. You're now seeing institutions building all sorts of institutional products for Bitcoin. So it's a very different world today.
You can say that again. This is Fred Thiel. We're talking with Chairman and CEO of Mara. Thank you for joining us this afternoon. We've got a lot more. Stay tuned, including your stock movers. What's up and what's down? We'll tell you.
You're listening to Bloomberg Businessweek Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
All right, welcome back to Bloomberg Business Week. I'm Lisa Mateo alongside Jess Menton. Carol and Tim, they have the day off. They are traveling back from the beach in California. They had a big conference out there. So
I saw some of Carol's photos on X. It looked like a lot of fun. There's lots of sunshine.
For sure had a good time.
I'm jealous.
Okay, so now what we want to do, we want to take a look at some of the stocks on the move today. So we're joined by Bloomberg News cross-asset reporter Vildana Hajric. So Vildana, let's start with Apple shares.
So much stuff on the move today, but yeah, I'm looking at Apple, ticker AAPL. It's lower by about 3% today after it debuted its thinnest ever iPhone and new Pro versions with enhanced cameras and more battery life. And that was earlier this week. And the company really is betting that a flurry of smartphone innovation can hopefully entice shoppers this holiday season. But I think what a lot of people count on for their iPhones is long battery life, right?
Yes.
And the thinner version is sort of
My
compromising.
husband's already
on some
asking
of
for
this.
the upgrade. I'm telling you.
I know. I've had mine for probably 4 or 5 years now. I probably need to
Time for an upgrade.
So I'll have to check it out. But I like to wait a couple months to see sort of how things shake out, and then maybe sort of later this year I'll
I'm
get
the
another
same
one.
way. I actually had one with a button up until a couple months ago.
Yeah, I missed those. Those are some of my favorites.
I
It's the
know.
home button. I hung on to that as long as I could as well.
too.
I know another one, of course, can't leave out Oracle. Walk us through the latest big moves here.
One of the really big stories
Right.
today, ticker ORCL, surging more than 30% at one point today, the most since 1992. I will say I was alive in 1992.
So was I.
And the company did give a very aggressive outlook for its cloud business, and it's an outlook that's cementing the software maker's place in the race to support demand for AI computing. And then thanks to this pop, another big story from today is that its co-founder, Larry Ellison, is now the world's richest person, surpassing Elon Musk's previous #1 spot for that
There's
race.
been so much news. The OpenAI thing. I mean,
Right.
it's a lot surrounding Oracle.
Jam-packed.
I know.
Jam-packed Oracle-related news, and it's also driving higher a lot of other AI-centric
CoreWeave2 is another
stocks.
one
Exactly.
that's been up double digits today as well, if you're looking at that
that's
stock.
a good point. Another big day for Klarna had a big day. They debuted.
Yes, ticker KLAR. I always love a good ticker. Jumping some 15% today in its opening trade with the company and some of its backers raising $1.37 billion in their IPO, and it's sort of signaling to the market that new listings potentially have room to run. That's been sort of a story for a couple of years now, in the post-pandemic world, like our IPOs doing well, and now we are seeing all of these crypto companies making plans to go public, and today you have Klarna doing quite well with its opening. The shares open at $52 each, $52 each, above the IPO price of $40 a piece.
And you cover crypto as part of Cross Asset pretty closely as well. What's the latest whenever you're speaking with your sources as far as how they're managing money and what kind of allocations they have to the crypto space?
To the crypto space, ETFs, it always comes back to ETFs, right? Because, and even the prior guests I heard him mention, Bitcoin ETFs, and that having been a really pivotal moment in the crypto ecosystem over the past couple of years, and so much money has flown towards those products. So these days, when you are seeing people allocate money towards crypto, a lot of times it is via Bitcoin ETFs in particular. But when it comes to the crypto companies going public, that is really an interesting story, because when we started reporting about any number of these firms making plans to go public this year, it still had been up in the air, like what will the market look like? Will the market allow it? And now we're really starting to see a lot of it come to fruition.
Vildana Hajric, always a pleasure. Never know what she's going to talk about. Okay, for more conversations like this, all you have to do is listen to our Stock Movers podcast. Subscribe for 5-minute episodes, the biggest winners and losers in the stock market. You can listen to Stock Movers, Apple, Spotify, or anywhere else you get your podcasts. Jess, so a big day for EcoData, right? We have PPI tomorrow, CPI. Your team's been working hard, trying to figure out as far as what's going on, what it means for the markets.
Well, actually, I did today's Taking Stock column about this. So basically looking at what the implied potential moves here for the S&P 500 on CPI day tomorrow. Stu Kaiser over at Citigroup has implied moves about 0.7%, but he was talking about how even when he was crunching those numbers, he still felt like those moves were still elevated and should probably be lower, just given on the back that there's that expectation. And of course, Fed Chair Jerome Powell talked about at Jackson Hole how they felt like tariffs would potentially be a one-time type increase, not longer term. And he always kind of brought up, when it came to Powell, the Thiel book, something that they would mention back during the last trade war in 2018 and 2019. And so looking at this, and especially on the back of today's PPI numbers, when you're talking about producer prices falling to the lowest level since April, that expectations that now the market, and of course the Fed shifting back that focus on the other side of the dual mandate when it comes to maximum employment, when obviously the Fed has been focusing so much on price stability the last few years coming out of COVID.
You guys have been busy.
We have been busy. So it'll be interesting to see tomorrow's CPI data. But of course, both of those PPI and CPI end up feeding into the Fed's preferred gauge for inflation when you're looking at core PCE. So we'll get that later this month, but that'll come, of course, after the Federal Reserve's decision on on September 17th, Lisa.
All right. Okay, everybody, if you're watching us on YouTube or listening to us on radio, Bloomberg Businessweek Daily continues. If you're with us on Bloomberg Television, The Close is up next.